Hi guys, and welcome to our webinar. This is CLIQ company. My name is Olga, and today we are going to talk about the easiest way of trading Forex. And of course, we are going to talk about price action. So nowadays, price action is becoming more and more popular because it has one main advantage. Actually, it does not require any additional tools or indicators for itself. Only price or so-called naked charts. But on the other hand, you need to understand, you need to keep it in mind that to read and to understand, to know how to use price action, to find entry points, exit points, to set your stop loss in the correct way, to find your profit. Actually, you need some skills because just looking at the naked chart, you might not understand anything. And if you have a lot of tools, for example, and maybe you are getting tired of them, because all the flashy indicators, you might not know how to actually make them work out altogether. It happens also even with the experienced traders, because sometimes you need to know that some indicators, instead of helping each other and give you signal confirmation, they start to contradict each other. So you need to know which indicator to combine with which. So in this way, of course, the price action is the way out. And to know how to master it, we are going to present to you 5 strong patterns based on the price action. We are going to talk about pin bar reversal, price formation, 3-bar reversal, pivot top or pivot bottom, CPR, false trend line breakout. We are going to talk about reversals. First of all, you need to understand what reversal is. It's when the trend is changing the previous direction and starts to move in the opposite one. For example, if you take upward movement, which characteristic is the series of higher highs and higher lows, it reverses into downtrend, which actually can be identified as the series of lower lows and lower highs. And it works vice versa when we are talking about the change and reversal of the upward movement into downward or downward in the upward. So what are the benefits of trading reversal? They also exist. And the benefit is that actually if your timing of entering position is right, you have a chance to take an early entry point and you can benefit or profit from the entire trend, entire new movement. And of course, in this case, your gains will be substantial. So the first pattern we are going to discuss is the pin bar reversal price formation. Very popular and easy to recognize. Okay, how the characteristics actually of this reversal pattern. It formed with the help of pin bar. Pin bar has very long tail and very short bottom. So the characteristics are the following. Number 1. The tail of the pin bar must be longer than the bottom. Number 2. The tail of the pin bar must be longer than in the previous candle. Number 3. The body of the pin bar must be formed in the end of the pin bar, not in the middle of it. And number 4. The closing price of the pin bar must be lower than in the previous candle. It even must be inside of the previous high and low, because we are talking about reversal upward into downward and at the same time the downward movement into upward. But it's not actually enough to trade successfully pin bar, just making sure that it's well formed and has all the above mentioned characteristics. Actually, need a confirmation. Sometimes the resistance and support trend line is actually this confirmation. How does it work? For example, a bullish pin bar. So we are waiting for the reversal of the price. It was the actually downward movement, so we are waiting for signal for a buy. Okay, we made sure that our pin bar is formed with all the above mentioned characteristics, which are 4 of them. And we have 2 ways of entering the market by opening buy order. Number 1, you can open buy position at the closing of the pin bar. Number 2, you can open buy position with the help of so-called pending order by stop. So you set up pending buy stop top order at the breaking of the nose, so a little bit higher than the tail. And it has actually some advantages. If the market moves in the upward direction, which you predicted, which you confirmed with the help of, for example, support line, which exists here, your order will be filled, and you will take advantage from the entire upward momentum of the trend, which is very good. And advantage number two, if market turns against you and moves in the downward tendency, your order will not be touched. So you will be able to save your profit, actually not to lose money. To set stop loss, you need lower the low, or if we are talking about bearish pin bar pattern, which is the mirror reflection of the bullish one, higher the higher the pin bar. And what about take profit? Actually, you set your take profit at the first nearest, if we are talking about bullish pin bar, a resistance area, in bearish support area. If you're an experienced trader and if you understand what I'm talking about. If you're a novice trader or the beginner, you don't know support resistance levels very well, so use trailing stop. It will secure your profit. Next pattern. We're going to talk about 3-bar reversals. It's a 3 candles formation, and it works actually in the upward tendency and the downward as well. So we wait, for example, on the upward tendency, we're waiting for the bearish signal, for the signal for sell. As an example, we wait for the appearance of the first candle. Condition number 2. Candle number 2 must close higher than candle 1. Condition number 3. Candle 3 must close lower than the candle 2. It's very easy. Actually, it works the same way on the previous downward movement. Appearance of the candle 1, candle 2 closes lower, and the candle 3 closes higher. Okay. How it works? Actually, this formation appears on the support resistance levels, as most of the patterns we are going to present today, and you enter the market on the 4th candle. And to confirm your signal, it's better to wait until, if you're ready to wait actually, it's better to wait until the 4th candle closes, and if it closes lower than the 3rd one, you have that double confirmation of the previous direction of the trend. You need to set to exit the market when the order of the opposite, when the opposite order appears. Okay, so this is candle 1, candle 2, and candle number 3, which is closed lower than the previous candle 2. You open your position on the 4th candle, or wait until the continuation of the trend, the confirmation of the signal on the 5th candle, and you close your position when the opposite order appears. Here it is, candle number 1, candle number 2 closes higher, and candle number 3, on the contrary, closes lower than the candle number 2. On the 3rd candle, on the 4th, you open your sell position. This is how it works. Next, we're going to talk about reversals pivots, or pivot top or pivot bottom. This is a formation of 3 candles also, when 2 are sell candles, 1 is buy, or on the contrary, the types of the candles can be different, or 2 buys, 1 sell, but what is more prominent? The 3rd candle, which is signal candle, actually shows us the prevailing tendency. So if it's sell, we're going to open on sell order. If it's buy, we're going to open buy order. And also these pivot tops and pivot bottoms patterns appear on the very strong highs and extremums on the strong resistance and support levels, which is actually the entry point for these patterns. So I've mentioned characteristic. What we need to do is to make sure that, for example, the sell candle actually closes lower than the previous high, and the next buy candle closes actually higher than the previous low. This is it. Okay, let's check it out. And one more condition, sorry I forgot to mention, is actually when we are talking about pivots, we need to make sure that, for example, in this combination of three candles, the middle candle must have the highest high or lowest low. This is actually a very, very important condition. So let's check. For example, from these three candles, the middle one has the highest high. So we open position on the fourth candle on the line of support and resistance. You can see actually from this short segment, it's a line, very good, very strong line of resistance support at the same time. And for example, in case of this signal, you see that here we have blue, red, red. I told you that types of the candles can be different. For example, three set candles, but the main condition, the middle one has the highest high. So we open sell order. Why? Because the third candle is sell. You remember, yes, the third candle is the priority of our trade. So open sell, you see, it elaborated very well. In this case, high, high, lower, low. You see that actually the signal didn't work very well. Here is stop loss. Nobody can be saved from stop losses. Even in this combination and pattern, we see it happens. And also, actually, you can close your position with very small profit as soon as you see the confirmation of the next signal, opposite signal, which has higher highs, blue, red, red. So we enter the market in the fourth candle, have our profit, and soon we have profit. We have signal, opposite signal for one. You see the signals, maybe the characteristic of these pivot top or pivot top or pivot bottom is they have lots of signals actually. And sometimes you need to choose whether to take them or not. Next CPR, it's closing price reversal. I'm going to talk about reversals. And this is combination of two candles. One is buy, second is sell, or vice versa. In case of bearish CPR, we need some characteristics of the pattern. First, we need a gap between the opening of the previous candle and the closing of the next one, signal one. So it was actually in the upward movement. So the opening price is here, closing price is here, but the opening price is over there. So we have a little gap. Okay, it works. And the closing price of the second candle must be lower than the previous high. Good. A bullish CPR, the mirror reflection. Let's look. It works in the market. Sell buy, the gap between the opening and closing, and the closing on the blue one is much higher than the actually low of the red one. So we open buy. It's Euro USD H4. You see there are lots of signals. Also successful signal. Here it is. The gap between the opening and the closing price of the second candle is much lower than the opening of the first one, or high of the first one. Also we had small, but still we had some profit. But here, maybe if you didn't exit the market in the right time, you're supposed to have a stop loss. Here we have two confirmations, two signals, even two. If your money management allows you, you can open even two transactions at the same time. And also we have successful trading over here. It's what happens on H4. But also, what is characteristic of this actually formation or pattern, that actually you can use it on any time frame, and M5 is actually the proof. So we have sell buy. The closing price of the buy candle is much higher than the previous low, and we have a break between the closing and the opening. We have buy condition. And also here, sell, I'm using buy, sell, buy, sell. We have also two orders, even following by one by one. And also, as you can see, it's successful. How you can see? Because stop loss is set higher the high of the local high and lower the low of the local low. Because we don't have some, sometimes the shadows can be long in the signal or in the first candle. So you need to be flexible and understand the market situation. Actually, talking about trade profit and stop losses in all these patterns, A lot of things actually depends on the conditions of the market and your style of trading. Next, we're going to talk about false trend line breakouts. And actually, there are some rules in how to draw them the correct way. So first of all, we draw the trend line over the borders of the candle, leaving out the tails. And we are waiting for the false breakout, which means that, for example, the candle broke trend line with the candle, with the body of the candle, but closed below it. Or it broke a trend line with the shadow, it happens like that, not in that example, but also closed below it. So we draw a trend line. What we do next? We wait. We wait until candles break out, break above, in this case, in this scenario, our trend line first. I think we have next, yes, liberation. So we wait until the candles break out our trend line in upper direction. Then on our significant last high, we draw horizontal line, and we wait until the market breaks above this horizontal line 2. So we draw horizontal line on the last high, significant high, and wait for the breakouts. This pattern also has its advantages. Actually, it gives us so early entry trigger and entry point for buy position that even indicators, should you wish to use them, actually don't show you that. So this is the earlier entry point for the buy position in case of reversal of the trend movement. So where to set our take profit until the next signal of the opposite order appears, or you can have your set of fixed take profit here. It depends on the time frame that you are trading. The stop loss should be set lower the low of the significant low, or lower the high of the significant high, if we are talking about opposite direction. So let's look how it looks like on the upper tendency. So we are waiting for the price reversal, trend reversal, more serious situation. So for example, we draw a line over the borders, and we are waiting for the false breakout. Here we had our false breakout with the help of a shadow. So on this prominent shadow, we draw horizontal line, and we wait first until the market breaks through our trend line and then break through our horizontal line. As soon as it happens, we open sell position. Set stop loss on the prominent, above the prominent high, or if it's too high, I just need to use some additional tools or decisions. For example, you look for the last local high and set your stop loss a little bit higher than it high. So this is how all these patterns work. Actually, we have given you 5 very strong patterns. I have showed you how to use them, how to read them, how to draw them, how actually use them for finding entry, exit points, stop loss, and take profit. So the only thing you need to do is use them. And you need to keep in mind that all the above mentioned strategies and trading strategies and patterns presented within this webinar need actually time and practice to master, and to take advantage from the demonstrations accounts for using them, for testing them, for trading them. We suggest to visit our site and choose any demo account. We have actually 5 of them, which fits you best of all. I wish you the highest profits with CLIQ company. This was Olga. We appreciate your comments and your feedback. Stay with us, stay in touch. Have a nice day.